Welcome to another episode of DeFi Dojo podcast, the podcast that gives you, in my opinion, the best cutting edge, up-to-date news in DeFi. So anyways, today there's just so many things going on. There always is, which is why I love DeFi. Let's do Tango first. So Tango just did this little, not even a TGE, not an LGE. It's kind of like a pre-sale, but not really. Have you seen this thing on Fjord?
Yeah, I missed it, unfortunately. Like I wanted to participate and was not expecting it to be so popular and to fill so fast. And it was kind of like in a heartbeat. Well, I would think it was like a couple hours, but in a very short amount of time, it filled up, which, last week we were in the world of like Trump fundraising for DeFi projects, not even
And that
getting
was a huge
like
flop.
20% of what they were looking for. And then you have Contango jump in and just like insta fill up. So maybe I was a little naive in assuming that I would have more opportunity for it, but I missed it. How about yourself? I think this is pretty bullish, pretty exciting for the project, but what's your take on this whole pre-sale or whatever it's being called, token sale?
Yeah, I was also actually a little bit surprised by how fast it filled. So when they first announced 45 million FDV, I thought, okay, that's a semi-reasonable FDV. It's really hard to gauge the value of these things because there's not many competitors. I mean, maybe kind of a competitor is Gearbox because they allow auto leveraging, but Gearbox is its own money market. It's not really an aggregator. Then you have like Summerfi, which I would say is more of a true competitor, but Summerfi also doesn't have a token yet, so you can't really compare there. You can only look at what they raised. So I had no idea sort of how to value it, but I did talk to the Contango guys. By the way, if you guys don't know, I am a Contango ambassador, so I already have a vested interest in this token. But I wasn't expecting it to sell out in 4 hours, though I did do some math on it. So the Tango token is going to have a use case, and it's going to be your traditional rev share. But I was looking at their historical volume, and this past year was 3.5 billion. And how they're going to do, so the way they're going to do fees is 25 bips for volatile leverage on whatever notional swap amount you have, and then 5 bips on pairs. And there's also Contango V3, which is a bunch of intense stuff that makes your swaps more better or something. I did a big podcast on this yesterday. I'll post it soon. But so that, if you look at their volume and do the percentages, 15% volatile, 85% pairs, should generate about $3 million of fees annually. 100% of those fees are going to go back to stakers. So right now, the only Tango out there that's going to be liquid is going to be this Tango. So $3 million of Tango. If 100% of that was staked, and we both know that's totally unrealistic, and they maintain this 3.5 or even increase this volume, then we're looking at 100% APR in actual yield on staked Tango. And I thought that was pretty cool. So that kind of bulled me up a little bit.
Yeah. Yeah. I mean, it's exciting to have products like Contango, which are genuinely useful products. I think I probably look at Contango's website almost every day just because I have such a focus on yield and loops and interesting stuff, and it's just such a great database to go and kind of see what's going on the looping side, looking at Aave, looking at Compound, looking at all the different kind of yield platforms all in one place. So I look at it for that, and then I also use it because it's pretty sweet to have free flash loans and just kind of the easy use that you get through Contango. And so, yeah, they will start having fees soon, and those fees will be going to Contango stakers. I think they're called VE Contango stakers. So I think it's pretty cool. I wish I'd gotten
there's
in.
going to be, I don't know anything about the VE tokenomics. We don't have to really get into that. Maybe, there is going to be if you're a user, there's tiers and stuff, you get fee reductions. If you want to learn more about that, go check out the Medium articles. We're not going to do a deep dive in here, but that information is certainly available. I was looking at this yesterday, and I told everyone in the dojo first because I'm probably going to talk about this because when I see a yield that interests me, get really excited to talk about it. And you only got 24 hours before I can't keep it in anymore. And that was this BTC. I mean, we've been talking about this very position for a while, which is this PTE BTC corn on Zero Lend. Remind me, Zero Lend, that's a Aave V3 fork, right?
Yep, it's an Aave fork.
Right. Okay. Aave fork. And right now, there's 11 EBTC principal room in there. No, but by the way, if you guys don't understand Contango, that just means like you could leverage up 11 EBTC that you held. So this is not like the total amount available to borrow. This is like the total principal you could put in there and still get at least 5% APR. But right now it's 33% APR. It's been like this for weeks now. It's been blowing my mind. It's like, you know, if you're a BTC person, this is one of my favorite yields. So there's another one we're going to look at, but I can't believe this is still available. And there's like, I have no idea how to value gravity points, but those also exist. So that's been kind of cool on the BTC front.
Yeah. I don't know much about gravity points as well, but this seems like one where you go for the yield, and if you get any bonus little fun extra points along the way, then it's just all the better. But yeah, I mean, that loop has been amazingly consistent. I never quite understand why it's not filling up. But PTs, you know, I will say, like, Pendle's had this kind of like rise, and then TVL's definitely come down and stuff, but they have cemented themselves as this kind of major primitive, you know, and like the proliferation of PTs is definitely, I think, here to stay. I was even talking to a project yesterday who part of their strategy is to get onto Pendle, which they've already done, and then to take their PTs and kind of use that as like a flywheel where, you know, people can lever up and, you know, have composability with PTs. So I think it's great. I think it's like super interesting how all these kind of DeFi Lego block pieces are you know, really kind of getting built out. And I think more and more we're going to see people building on top of Pendle and PT different structures and, you know, speculating on YT. I think that will be, ends up maybe being the place where there's more need for hype or more need for Pendle to kind of do work on it, because I think there will be a demand for fixed rates returns for the long term.
Well, yes, I would say the demand for the YT is, in my opinion, going to come from the demand from the PT right now, because people have been a little bit burned by the YTs in the past with some of the like first restaking. Well, the first restaking seasons, if you did the YT, you did incredibly well. With the second and third seasons, you might have got really burnt depending on when you purchased your YT. So YTs have been a little bit hit and miss. Definitely huge home runs in the first season of most of the LRT projects, but then like could have been burnt really bad in some of the subsequent seasons. But one of the like new Pendle markets that we talked about last week, but I wanted to give some updates on, was Syrup. So, well, I got to talk to the Syrup team, which is great. It is the Maple team, or like they are effectively the same people. So it's not like Syrup is some random like ghost protocol that is just building on top of Maple. They're effectively like working hand in hand, which is incredible, amazing. So like, you know, there's more structure there and you can like be more confident in that team. The PT currently offering a fixed rate of like 15% APR. It was lower than this and actually made for some really exciting. Yeah. So the implied yield was 11%. And man, I think that would have been a steal there, because if you looked at the last season of like Syrup yields, I think actually I have it up. Yeah, here it is. The last season, you know, the average person got a 10% additional yield in their, you know, drips APR. The full 3 times point person got an additional 15% on top of their 10%. So they were getting 25%. And what I have learned is that these YTs represent, well, I already knew that a YT represents $1, you know, deposited on Syrup, so it's going to get that, but it's also getting 3 times drips points. It's as if it was deposited for whatever the longest term is. I think 180 days, so 6 months or something. And so, you know, the average last season was 20%. I think the average this season might end up being somewhere around 17.5 to 18%. So you could do a 3% arbitrage. There's 99 days left. So 3% in 99 days, that's, you know, maybe roughly another 10%. It's 10%. It's not an incredible arbitrage, but it was earlier when it was 11%, because that would have been, you know, decent.
I think this is like
go ahead.
A perfect example of like, you know, how we think differently, and like how we are probably different buyers of these two kind of products. Like you're looking at that and you're, you know, looking at the trade of the YT and the arbitrage you can pick up there and the additional like APR. I think that's super interesting. Like, you know, I totally hear you on it. That kind of does get my blood up. I am one of those people that got burnt on YTs and like have a little bit of PTSD with them. And so
yeah,
it's a little bit of a tougher pill for me to swallow. But I look at this and I look down the list on, if you just go back to market so we can look at the PT numbers here. I look down the list and I'm like seeing all these PTs and I'm seeing like SUSDE 14% with a 165 day, maturity. I see like the SERV one at 14, almost 15%. I see USD plus. I guess that's pretty like short term. Anyway, I see like multiple stable coins that are like yielding 14 or 15% over relatively long durations. And it gets me excited and it gets me interested. And I kind of start thinking about, maybe ways that you can get leverage on that. Like the famous SUSDE loop, SUSD loop that was going on in Morpho for such a long time.
Is this a new market? March 2025? Did this just launch?
Yeah, because the other one's winding down now, right? So the other one only has, there was an October one for a long time, and then the Morpho spin up one.
The October one ends in one day. There's this December one that I was familiar with, but it's mind blowing to me that the one that's in on 155 days technically has a better fixed date than the one that ends in 64 days.
Yeah, I think that's kind of related to the airdrop dynamics.
Okay.
For it. But anyway, I mean, my point is this. You are like the speculator on the YTs and kind of thinking about that and doing that arbitrage. And I'm sitting here looking at like a fixed rate return of like, 15% on stablecoins, and just like that's kind of mind boggling. But it's kind of like the very cool things that only DeFi can offer, right? Like it's like you have the Degens, the Stevens out there speculating on points, and you have the Maras out there like greedily trying to lap up as many fixed rate yields on stables as they can. So it's definitely cool.
Yeah, I was trying to pull up Morpho to see if they have any markets for this. I mean, like brand new SUSDE, because I mean that would be so nice to loop 14% on your like fixed rate, 14% on your collateral,
and there's $100 million on it in that pool.
In the pool, yeah, but I mean on Morpho they have $100 million.
No, but like to swap into it, because the big thing with Pendle recently has been that they went too far with like their yield curve or like their like swapping curve. It was that like you had really good efficiency, but then the markets like went out of range, and so they kind of reacted in the opposite, where they made the yield curve like broader, and so that it was essentially it would never go out of range. But now the swap execution on Pendles like can be pretty tough. Like if you want to swap in and out of stuff, you really need to use a limit order. If you just like market buy or market sell, you can get absolutely wrecked on doing that. And so I hope, I've heard that there is like some new things coming to Pendle. I hope this is one of the things they fixed. But, still totally usable on, using a limit order. But you could even find that on a market like that has $100 million in liquidity, it still might not be like good swap efficiency. What is your thoughts even on like, oftentimes we get questions about when someone should unloop, right? Like you have a market like that is ending in 2 days.
Great question.
Some people want to get out early. Some people want to wait until maturity. Is there actually a better preferred way of doing it?
Yes. 2 things. One, wait until maturity, because the Contango contracts will run through Pendle. So if you wait until maturity and then you unwind your position, the PT will be redeemed for the underlying value. That's the good part. However, you will be selling the debt token or effectively flash loaning the debt token into the PT. So you're effectively like beholden to the swap difference between SUSDE and DAI. But that, there's plenty of liquidity there. It's not really a big deal. With some other markets, it is a big deal. But with it, like if you were in an illiquid one, maybe on Optimism or something, with like a smaller LRT, you could have some issues. But either way, if you wait till expiry, you are not beholden to any of the price impact on the Pendle AMM. So that's the good part. You're going to get the redemption value of the PT. So that is my recommendation. And then, as a rule of thumb, never roll over Pendle stuff.
We saw a bunch of vaults that got wrecked, just like market buying PTs and moving from one SUSD market to another. So yes, never roll over. Roll over,
right? And the reason why that happens is because when PTs are purchased, it pushes down the fixed rate yield. So if there's a huge purchase on rollover, effectively everyone in that just got a terrible fixed rate yield, and they've locked that in. It's not like that yield can increase because they've locked it in.
Right.
So it's yeah, don't roll over your positions.
So I mean, but this is great though. It's great to see new stuff happening with Athena and the PTs. It's also great to see, you know, this option now with Syrup USDC. Did you hear of any kind of like new integrations? Are they going to have a Morpho market? Like what are the, I know that you're looking at like speculating on the YTs, and that's an interesting thing, but like what else is on the roadmap? Have you heard anything?
Yeah, so this is an excellent question. I talked to them yesterday, and I felt kind of foolish because I should have, like, I definitely should have known this. When I saw them on Pendle, the first thing I should have realized is that there is obviously a receipt token. There is obviously a composable derivative from lending. It's Syrup USDC. So, you know, when I posted, like, why doesn't Syrup, you know, make a composable derivative against this position? And they already did. It was why they were on Pendle. So when you have a position on Syrup, and you know, let's just say I deposited some USDC, I will get Syrup USDC against that. It will be, you know, generating like 10% APY intrinsically. Love that, plus getting some drips depending on however long I commit it. And because you have this composable derivative, you would imagine that Syrup would be like on the path to composability. They are, which is really cool. So they should have some markets on Morpho soon. That'll be really exciting. They should have some PT markets on Morpho soon, also very exciting. And then, of course, we'll probably see them on Contango and some other places. So I am looking forward to that. One other thing you can do with the like Syrup tokens that you guys have probably seen is, you know, in terms of stablecoin yields, is this Syrup USDC pool still over 20% base yield, and you're getting the 3x drips. So you're getting 20% or 22% plus 3x drips. Those drips, you know, I think, you know, with the max 3x multiplier, anywhere between 6 and 9% additional. So, you know, 27 on stablecoins, pretty decent. And if you have a bunch of Pendle locked up, you could be getting 30 plus 7. So let's just say 37%. You know, decent stablecoin yield, in my opinion. Right now, I want delta exposure, so I'm all about like the BTC-Fi, and you know, I am definitely an ETH bag holder, but getting more and more convinced by the day of BTC-Fi.
Pretty skeptical of BTC-Fi. I feel like maybe a podcast or two ago when we were talking about it. What has you know, changed the winds for you?
Do you remember what I was skeptical about? I mean, I think maybe it was like there
custodian risk, I think.
Yeah. There are some like custodial risks. We saw Union BTC, not Union, sorry. We saw Uni BTC. Uni BTC had that exploit. Everyone's going to be made whole. That's the positive side. Typically, when LRTs or LSTs get exploited, it's not really a big deal because the underlying assets are still there. And that's such is the case for Uni BTC. Everyone will be made whole, but it, you know, was a little bit frightening, and there are some custodial risks. And I think one of the things I said is that it's not really in the spirit of Bitcoin. We saw Saylor say that, you know, all these BTC decentralization maxis are bad for Bitcoin. Terrible PR for Saylor, of all people. But I get it, right? Most of Bitcoin is custodially held by institutions, you know, yada, yada. It's good for the space. It's good for price. And that's all true. Nevertheless, I do understand also the decentralization maxis who just, you know, not your keys, not your tokens kind of stuff. I am still very into BTC-Fi though. I still think that the yields are getting better. There is, if you trust the custodians and if you trust the backing, it makes a lot of sense to at least diversify into BTC-Fi because Bitcoin has historically outperformed ETH under almost all time horizons. So, you know, there's a post, most of you guys probably saw it, which is like last time Bitcoin was at 69,000, ETH was at, you know, 4,200. And, you know, right now it hasn't even broken 3,000 again. So it is painful to be an ETH maxi, even though there have been some amazing airdrops. You actually have done really well with some airdrops recently. Tell me about your experience on Scroll.
Yeah. I have a few more questions about BTC-Fi, but let me talk about Scroll quick and we can come back to it. So yeah, Scroll has been great. I mean, I've been farming Scroll for, I don't know, 6 months, a year. Like I talked, you know, previously about ambient and like farming that for Barachain. Well, I've been doing that for pretty much since they launched on Scroll. But what has been kind of the really, interesting play was when they launched Aave on Scroll, and then you could at first start looping up wrap staked ETH, which was a positive loop, and I was doing that. And then they added Ether-Fi ETH to Scroll as well. And that was a incredibly profitable loop. I think, I've been fully looped up on that for something right on 2 months. And I think the returns on that um, 20% or 24% even, depending on exactly like when and how, and if you hedged your Scroll or, the airdrop about that. I think Steven's giving a look at like the 20% borrow rate that's on Scroll right now. It is definitely brutal right now. Everyone's kind of like rushing for the hills. Maybe people are going to Linnea, or maybe people are doing all of these different things. But the rates have been pretty brutal the last 2 days. But before this, like for the last 2 months or even 3 months, the rate's been the lowest. It was like anywhere between like 2.5% and 2% to borrow. So like basically it's been the cheapest place to borrow. Doesn't quite have as good like LTVs as like mainnet or Arbitrum, but still you can get 90% LTVs with E mode. And so, I think that this play, all said and done, will end up being something a bit over 150% APR if you consider the Scroll portion of the airdrop, the positive carry that you're getting on borrowing ETH for like somewhere between 2 and 2.5%, the staking yield from Ether-Fi ETH, the eigenlayer programmatic rewards. It's been a pretty meaty, juicy play, and one that I've been kind of talking about and in for quite a while. The next question is like if it makes sense to stay and kind of like
Right.
what makes sense to do afterwards. Obviously, right now, paying 20% to borrow ETH times 10x leverage is incredibly painful and brutal. So like if you're in this position, it is a bit of a game of chicken where people need to consider if they want to unwind to get out. Basically, we've seen like a sixth of it was kind of like sitting below the optimal rate on the yield curve, the borrow cost curve on Aave. A lot of people have pulled their ETH and are now moving on to farming something else. Scroll is going to have a season 2, although we don't know like the details of that. We don't know when it's going to happen. We don't know if it'll be like kind of a continuous thing, if there'll be another just big chunk that people can get. Personally kind of considering staying. I'm going to kind of wait and see where these like borrow costs shake out. Like obviously 21% borrow cost is completely unsustainable. But if it can come back down into that normal range, I think that this could be an interesting loop where you're getting the normal Ether-Fi rewards, which, let's just say that's something like between 20 and 35% just for, levering it up, getting the programmatic rewards.
Okay, yeah, but let's be clear so that
squared.
people don't mistake what we're saying. Not a 20% or 10% or whatever on top, like just base on top of your wrapped Ether-Fi ETH. That means max leverage, so probably 1 to 2%, and then leverage 10x.
Yeah. So I'm counting it as like, let's just be easy math here. Let's say 3% native staking yield. It might be a little bit more, it might be a little bit less, but 3% on average is kind of roughly it. I think that the LRT squared numbers, so we got our first print of that last week. We'll get another print of it this week where you can go and you can actually claim your LRT squared and like actualize those eigenlayer rewards on a weekly basis. So, last week it was a little bit complicated because it was 2 months worth of rewards. There was some ETH-Fi tokens that were part of that. So calculating the APR is a little tough. I think it's a bit over 1.5% is what I was able to actualize on that. So, pretty good. I would expect it to come down a little bit. Like eigenlayer has been underperforming ETH. So we do need to kind of like watch that. But I think, that's probably like 1.3%. So you're at like 4.3%. Plus, if you look here on the right-hand side, it says current season rewards. There are also partner rewards coming. We don't really know what that is, but that could be a nice meaty bonus added on. And then there's also LRT squared governance tokens that we will be earning as well. So, I think you're talking about a minimum of like 4.5%. So like thinking of the yieldiness of Ether-Fi ETH being about 4.5%, with the potential of it being significantly higher if some of these things play out, like we get the LRT squared governance token airdrop, if there's a really nice partner airdrop. And so that's why I'm considering staying on Scroll. I still kind of consider the EtherFi ETH loop on Aave, whether that be on Scroll or Arbitrum or Base or Mainnet, to be one of the best plays, kind of like one of the best risk-adjusted returns in DeFi. And so if I can get a bonus Scroll Season 2 airdrop on top of that, it, could even juice it up even more. So we'll see. I am not like running for the hills like it looks like a lot of people are from Scroll. I'm going to try to wait it out a little bit, but I can't wait too many days of like 20% borrow cost. That's like pretty unsustainable, of course.
Yeah, exactly. And to clarify, I think what you're saying is that this strategy will have been, or will, like in retrospect, have been around 150% while you were in it. Currently, with that 20% borrow, like I wouldn't go and ape into this right now because currently it might be. I mean, for all we know, it could be negative. It could be a non-positive loop because of this 20% variable rate. But yeah, as we look at the details, we can see historically it's been around 2% when it was that low. Amazing, even organic yield. Now we're seeing some crazy volatility. I think probably on like the Scroll airdrop information coming out and people finally speculating and think, oh my gosh, and becoming wise to this opportunity.
Exactly. So the last like 2 months, I think it's been over 150%, great play. Mm-hmm. Those in the dojo that like were able to scoop it up and kind of, play this did really well, both on the Scroll airdrop portion of it and the EtherFi portions of it. Right now is not the time to enter. You can even see since we've been on this call, it's gone up 1%. Today is airdrop day for Scroll. So like, there is a lot of volatility. It is a very negative yield loop to enter at this moment. But in a day or two, it may have kind of evened itself out a little bit. And if it does, then it may be worthwhile staying. That's my only point. But right now, it is certainly not worthwhile staying. In fact, it's a very kind of, could be paying like, 0.5% a day to keep the position open. So it's definitely like playing with fire. Although, with all of these, we've seen EtherFi caps like kind of increase across the board. Scroll increased, Arbitrum increased, Mainnet increased. And like, there's definitely demand for it still. There's definitely people that are still going and leveraging these things up. It will be kind of interesting to see if over time the Aave borrow costs continue to creep and go up. But, in the relative term, like the recent relative term, we've seen spikes like this, and then we've seen them kind of go back to equilibrium within, 12 hours or a day or something like that.
People in the dojo have definitely done really well with this particular strategy. And I've been kicking myself in the butt because you've been talking about it for, like months now. And it just has been incredible. One of the things I want to ask is where are you hedging, or where are people hedging their Scroll?
Well, it's live now, so you can go sell it. Like the airdrop is live. Okay. The tokens are claimable. This is an actualizable thing as of a couple of hours ago.
So you don't need to hedge anymore.
Before that, the major sex is Binance. It listed on Binance, and then of course, if anything lists on Binance, then all the other exchanges kind of pick it up. So Binance or Bybit or any of those things. But yeah, the beauty of this play for those that were in it for the last 2 months is that like, it's no longer speculative. All of the portions of this play are realizable theoretically if you can exit the position and move on or sell your Scroll or do whatever. I'm actually kind of bullish on Scroll though. Like I know that there's been so many L2s, and I know that like, a lot of these L2 tokens have not performed well. My personal opinion, I think Scroll is trading at roughly $1 billion, maybe like 1.1 billion. Scroll is like, actual, in my opinion, new tech, interesting tech built into L2s. It is a ZK EVM. They have built their own stack. This is not just like an L2 that's built on the Optimism stack or the Arbitrum stack. They actually have their own kind of like underlying, tech. I think that they are well regarded, well supported, by the Ethereum Foundation. So, who knows if it should be worth as much as an Arbitrum or a Zksync or an Optimism, but it probably shouldn't be worth a fifth of them or a sixth of them. Maybe it should be worth half or something like that. So I've sold part of my airdrop, to kind of like actualize some of the returns from this loop, but I'm also holding on to some other portions of it just to kind of gain exposure. I think if we go through a bullish period, something like Scroll, could be a new interesting token for the degens to pump.
It is true. I saw one of those memes, the guy who's like holding the girl's hand but looking back at the other girl, and it was him with Scroll and then looking back at Linnea, because it seems like in the L2 airdrop farming rotation, Linnea seems to be up to bat, right? The next thing that people are getting excited about. And so I was checking out the Linnea markets. There is no Aave market for Linnea, unfortunately. But there is a zero lend market, and I was just now looking at this Frax Ether play, because of course I'm not going to go farm without getting a strategy going. So I saw Frax Ether 9% yield, plus I think the base yield of Frax ETH also around 3%. So you're looking at 11, 12%. 12% yield, plus you get the, if you have a turtle club, you get extra points, you get the whatever the gravity things are, the Linnea points. Unfortunately, max LTV is 70%, so I forget what that is. I think it's like 2.5 or something around there leverage. But the borrow cost on ETH is only 3.5%. So that's an arbitrage of, I don't know, let's just call it 7%, 7.5, 7% times 2. You're going to get around 25% yield on that loop plus Linnea points. So I don't know. It kind of got me excited a bit this morning.
Yeah, I was deep in the trenches of Zksync, Scroll, and Linnea. Those were kind of like the three that I had been farming for a very long time. I have mainly left Linnea. It's hard to compete when there's stuff like Aave loops you can go do, and it feels just like such a, relatively acceptable risk. My tolerance for smaller money markets is just like not very high. And so like this interests me much less than having an Aave version of it. That being said, I do think the rotation into Linnea probably makes sense. I've been talking to a lot of teams recently, and kind of consistently what I've been hearing in terms of when people are going to be doing their TGs is after the election. I think that's the new meta, is people are like, the election, which is taking place, I think in exactly 2 weeks from today, is this like high volatility, high kind of uncertainty thing. Yes. And then people are looking at like kind of the end of November as potentially being a time when the markets have more certainty. Maybe we've had a positive outcome, whichever direction it goes. Could be positive in either way, I guess.
Mm-hmm.
And, so teams are thinking, okay, maybe I'll do my airdrop, maybe I'll do my TGE end of November. And so, who knows? I haven't like heard a rumor of Linnea airdrop being next month. We did actually kind of get advance warning and heard that this one was going to happen. So we were talking about on the show, I think like a month ago, or at least in the Dojo a month ago, and knowing kind of this would be the time when Scroll is going to be happening. I haven't heard the same thing for Linnea yet, but I have heard the same, that like next month is the target for a number of different airdrops that we've been waiting for.
Yeah, I mean, on the price. So one of the moderators in the Dojo, who we absolutely love, is Jungle Book. Fantastic guy, love him to death. And he pointed out correctly that after elections, typically if a Democrat wins, the market does better than if a Republican wins, to many people's surprise. And so, at this point, whoever wins, I think just taking away that degree of uncertainty is fantastic, because then the market can just say, okay, the markets will immediately react. There will be a lot of volatility. Then historically, we can resume up only. So that's what I'm hoping for. I do agree there's going to be a lot of volatility, but historically, and hopefully we follow the historical trends, after the election, no matter who wins, we tend to see positive price action. I think a lot of protocols and projects are banking on this. And, as you said, we've talked to quite a few of these guys who are aiming for sort of like mid to end of Q4, right after the elections. And I too am hopeful. I did the math, by the way, on this loop. It's 3.3 repeating leverage, and that would be a 28.5% yield before Linnea points. So it might not compete with that 150, because I don't know what Linnea points are going to be worth, but it is interesting if you are on Linnea and you are just like farming some random stuff.
Yeah, no, I think that is legitimately interesting. My focus is more and more kind of going in the direction of Barachain. I think we are getting closer to that. One protocol, which I know that you've been spending a lot of time on, which I would love to just better understand, is Dolomite.
Oh, yeah. Let me pull it up. Where is it? Okay. Man, if I had funds on Arbitrum, I'd open up a position right now, because there's so much cool stuff on Dolomite that I didn't know about. But then I hopped on a call with Corey. So Corey, I talk about him all the time. just because I'm so happy for him that he's working on World Liberty Fi, even though I know it did really terrible. I just think it's cool that he's doing all that. He is what I would call like one of the many, but certainly one of the genius developers in this space. I can ask him about literally any protocol, and he has like an encyclopedic knowledge of how it works, you know. So I'm always just dramatically impressed, or remarkably impressed, by how much he knows about things that he didn't build, and then how much he, of course, can tell me about the things that he did build. So anyways, Dolomite is really cool because it has like these, you can create like credit positions. So the way it works is like you deposit some funds here. Man, do I have any ETH? I do. I'll deposit like the tiniest little bit, 60. I can do that. Yeah. This is on Arbitrum. Okay. I just want to show you guys that you can auto leverage in Dolomite. It's really cool the way it works. It's called like a zap feature. So once you deposit, it'll be in your balance. And then you can open up a position. So I've deposited it first. I'm going to open up a new borrow position. So I need first to add this as collateral. Boom. And then I'll show you all the cool stuff. So some of the cool things are like the collateral they have. You can see GMBTC is GMX's BTC Delta 1 pair. Now, there are a few things to note here. Like GMBTC historically hasn't performed amazingly, but since like September 15th, it's done really well because they apparently GMX has like done this GLV mechanism, and GLV has been routing a lot of swaps to the GM BTC and GM ETH pools, which have boosted the fee revenue. So now we're seeing a much more consistent up and to the right yield there. So instead of the historical rate being around 4%, now we're seeing a new rate around 14%. But I really do need to take more time to understand that well. So anyways, GMBTC.
Just one question, Stephen. Is GMBTC, just so I can fully understand it, this is an LP of BTC in a stablecoin? Like, is it mainly...
No. That would be GMBTC USD.
Oh, okay.
So there are
what is
things.
GMBTC? Yeah, how do you differentiate these things?
Well, GMBTC is I call it Delta 1. That might be confusing for some people. It is effectively a yield-bearing Bitcoin derivative, I think is one way to think about it. So it has only delta exposure to Bitcoin, which means it's only exposed to Bitcoin. It is not like an LP. And even the LP, the BTC USD derivative on GMX, is more like being 0.5x leveraged on Bitcoin and less like a BTC USD LP, because it's not going to rebalance. It's not going to get impermanent loss like an LP. So, but the BTC USD and then like a subscript BTC, that is only exposed to Bitcoin. And the way it works is it takes a long and short position on Bitcoin such that you have 1x exposure to BTC and then generates fee revenue. You can see the current fee revenue annualized is 15%, but that's like, this is real time or like a daily average. So that's going to change pretty dramatically over time. But it's been above 12% for the last few whiles. And it's, you know, I have really been checking this out. Now, one thing to note is how the Oracle works. So GMX actually allows people to sort of like make their own Oracle, kind of. GMX has built an Oracle adapter. So GMX has said, okay, we'll tell you what the PNL of the traders for this liquidity is so that you can put in what underlying Oracle you want to use, and it will then combine the P&L plus the Oracle price, Oracle feed you're using to give you a composite Oracle of like the underlying Oracle plus the GMX P&L. Now, it sounds really confusing. It's really not. It's just some Oracle plus the P&L of this pair. And so Dolomite uses the wrapped Bitcoin Oracle. So it's wrapped Bitcoin Oracle plus GMX P&L. And so you're dealing with a pretty stable Oracle there. That actually gave me a lot of confidence in this thing. So where were we? So that's, do you have any more questions on that? Here we are. Okay. So yeah, they have both GMBTC and they have GMBTC USD, which is so GMBTC USD is like half X leverage, and then GMBTC is like 1x leverage. So, you know, effectively BTC exposure.
Got it. Okay. No, that makes sense. I understand the assets now. So what's the strategy behind it?
Well, the strategy would just be collateralize GMBTC, and then probably most people would just want to keep that 1x exposure but want to increase the yield. So they would collateralize GMBTC and then borrow WBTC against it and leverage and loop that, because WBTC has a borrow cost of 6%. So again, I use the term arbitrage. The difference or arbitrage between those two rates is roughly, 6 to 14.5? 7.5? No, 8.5? Yeah, 8.5 percentiles. I think the max, the liquidation APR is 83%. Probably don't want to push that to its limits. So let's just say we did 80%, because I know that one off the top of my head is 5x leverage. So at 80%, 5x leverage, 5 times 8, 40% additional APR, 40% plus 14. Well, actually, it's minus 1. So 4 times 8 is 32. 32 plus 14 is what, 52? So we're looking at 52% APR on Bitcoin, which is absolutely amazing. But again, do realize historical yield for GMBTC has been a bit iffy, around 4%. Recently, in the past month, it's been much better. And I think that's attributed to the GLV mechanism, but I do need to do some more research there. So don't go aping without doing your own research, but that's sort of where my head is at with this particular strategy.
Yeah, I mean, it sounds like a really interesting strategy, and it's also great that Dolomite can kind of list so many of these interesting different collateral types. You have the old school GLP to the new school GM assets, right? Both the GM and the GM USD, like the GM asset plus the GM asset plus USDC. So that's very interesting. What are some of the other interesting things on Dolomite? You said there was a whole host of different kind of interesting functions and things you could do over here. Once you open a position like this, is there any kind of cool next steps you can take?
One of the other things you can do is you can literally borrow more than your collateral. So you can take an under collateralized loan, because what it will do, it'll do one of two things. One, it will just leverage it for you. So let's just say I have ETH and I wanted to borrow, easy ETH, which would not be a good idea, because easy ETH, wherever it is, probably it would cost more to borrow. It would be a negative loop, would not be a smart thing to do. Yeah, it costs 7% to borrow plus the actual restaking. No. So it costs 7% to borrow. So it'd be a negative loop. But if I click Zap, then I could borrow, I deposited 0.025. I could borrow probably 0.05, which is twice what I 0.05, which is twice what I deposited. So I would be 3x leverage effectively, and it would just zap the easy ETH back into ETH. So it would be like a reverse leverage staked loop. So this is really cool. It effectively allows you to leverage automatically using a flash loan, feeless flash loan, and a DEX routing aggregator, and also swap mechanism to swap into your end state desired asset. And I think also there is a way, I haven't done it yet, where it will also deposit back as collateral. Yeah, so let's just say you wanted to then have it deposit as GMBTC, right? Because GMBTC is getting 14%. You could select that, and what'll happen is it'll deposit as collateral back into Dolomite, and you'll get whatever the deposit collateral APR is. So I know it probably, if you're listening to this, you're like, what the heck are they talking about? I will do a video on this soon, because it's a really, really cool thing. And there's some interesting loops that probably people haven't considered or thought about. And so in my opinion, it's a pretty cool place. And I do think that the GMBTC and the GM ETH yields are compelling, in my opinion. GM ETH, 10% yield, 4% borrow cost, 6% arbitrage. That's compelling.
Well, and also this is just all super interesting for me as someone who likes to participate in airdrops and stuff like that, Dolomite doesn't have a token yet, and Dolomite is going to be a core infrastructure DeFi protocol in Berachain, and so will likely give you Berachain exposure as well. So, not only are these strategies just inherently interesting, they also kind of let you speculate on future upside. With Dolomite, you're earning, what are their points called again? I'm forgetting the name. But they have their own. They're
going to have two different things. One of them is right now minerals are what you're earning, but when Berachain launches, or when they do the boycott, they're going to also have gems. And I'm not allowed to say what those will be worth, but I can say that you will want to be farming them.
Bullish. Okay.
Yes.
Interesting.
Yeah, for sure.
Interesting. Cool. Well, that's a great explanation of Dolomite. I'm really looking forward to the full video that you do on it. It seems like every time you're like looking at a new protocol or platform, it always seems very kind of hard to understand and difficult from the outside. And then, learn a bit more, watch a calculator guide video, and frequently for me at least, it becomes kind of much easier to understand everything that's going on. But I also appreciate how kind of in-depth they are in the Arbitrum ecosystem, dealing with GMX assets and all these kind of interesting things. And I would imagine they'll do the same for Berachain as well. So there will probably be, when that happens, hopefully sometime in the next month or two, some really interesting collateral types that will be able to be looped up on Berachain as well. So looking forward to that also.
Yeah, for sure. And they're going to have like the mechanism where your collateral on Dolomite is also qualifying for whatever the like proof of liquidity staking mechanism is. I don't fully understand how that works. I definitely need to get like a Berachain guy to come on here or even Corey to come on here and like explain it to me. But I do know that you will be allowed to or able to rehypothecate your collateral to, earn some additional BGT or however that works.
Got it. Cool.
Can I show you? So this is another. I just want to like show off OKU trade again because it's so cool. You know what? Give me a pair. I was looking at Wrap Bitcoin CBBTC recently.
Let's go look at the scroll pairs. Do they have those?
All right. Yeah. Scroll. What do we got? Scroll WETH 0.3%. That's probably good. Is the assets Scroll, right? SCROLL.
Yes.
No, That doesn't look right. TVL. Almost nothing.
Maybe it's not being counted yet, so maybe that one doesn't make.
Can I sort by volume? Because all of these look thick. Scroll. Is this the right price? Here it is. Right? No,
it should be like $1.10.
Oh, maybe it's not. Maybe it's not available right now. Do you have the token address?
Yeah, I could find that.
All right, Scroll. Would that be Scroll Scan? Do you know the scanner over there?
Yes. Or you could also just find it on like CoinMarketCap or CoinGecko. They oftentimes have the...
Oh, that's true. Oh, I'm on the wrong. Sorry, I was on the wrong blockchain. That'll do it. All right, switch blockchains. Scroll. There it is. SCR. Okay. USDC or WETH? Do you have a preference?
I don't know. What's interesting?
Looks like most of the volume right now is in USDC. So we'll go there. And okay, so the cool thing about this, actually, let me click trade. So if you wanted to look at like the volume profile, liquidity profile, that's a bunch of fun. I highly recommend doing that. But if you click trade, you can actually backtest an LP. You're not going to be able to backtest it now, obviously, because there's, hours of data. But so actually let's choose something. Well, okay, I'll start with the WETH USDC pair just to show you how it works. So let's just say I have like this range here that I'm highlighting. So between 2,500 and 2,690, and I click and I deposit 1,000 USDC and half an ETH. I can click 7 days and run backtest, and it'll tell me what the annualized APR is, both in USDC terms and in WETH terms. So in USDC terms, that would have been a 237% APR. In WETH terms, 242% APR. And like just that tool to me is nuts. It's so cool. I love it.
That is really cool. Every time I play around with Oku Trade, I find more uses for it. Like you can also set limit orders, which was crazy, right? Like you can set like Uniswap, 1-inch limit orders, but also they have their own set of limit orders where you can it's basically a DEX aggregator. So think of it as like DeFi Llama Swap. It's like that, but you set a limit order, which is crazy. I also think this function that you're looking at right here on the left-hand side, where you look at a pair and you can look at the depth as if it was like an order book. You can go and like look at how much is liquidity there is on every single little tick. Is super interesting as well, especially for doing kind of like Delta 1 pairs when you're doing like a wrap staked ETH pair or whatever it is. These numbers can really make a big difference, when you're trying to decide how tight or how narrow you want to be.
Yeah, it's been awesome to like slowly learn more and more about this tool. Also like bridging, I don't know what ramp means, probably off ramp and on ramp. analytics. I'm like learning something new about this tool, like nearly weekly. So I'm excited to actually play with it. Also, from what I understand, and I'm pretty sure I'm right about this, there are no fees to do anything with your Uni V3 position. So if you wanted to open your position via the Oku Trade front end, there are no fees to open, no fees to close. I don't know if you can like manage your position, but I do think it's like really handy to be able to, highlight the range you think is nice, because you can sort of look at what everyone else is providing, do a quick back test on that range, a 7-day back test, 30-day back test, 90-day back test. Probably not going to have a good result for 90 days.
Like most other protocols, like try to like clip a fee from someone when they're leveraging, when they're swapping, when they're doing whatever. Oku Trade, works on grants. So they try to get a grant from Scroll, a grant from all these different ecosystems that they're working with. And so then they don't charge any fees. So for their DEX aggregator, no fees. For their bridge aggregator, no fees. All of the different kind of features that you can do with them, they don't charge the base user anything, because instead they are like an attractive protocol which has all this data and all this functionality, and the blockchains themselves want them to be there and pay for it. So I think it's super cool. I've been using it more and more, and every time I use it I find some cool new stuff. So always like talking about useful tools in DeFi. There's such a big need for them.
Last thing I'll say about Oku Trade is that they are also very receptive to feedback. So like we have been talking to them, and like if there's ever like something that you want to do that hasn't been done yet, and one of the things that we said was, I would prefer to deposit my position in ETH rather than WETH. And look at that, it's 1 week later, and now instead of forcing you to use WETH to deposit into like WETH USDC positions, you can now use ETH instead. Amazing how like responsive they are. Anyways, let's stop hyping them up too much, even though I do like them. I wanted to ask you and pick your brain about this Zksync proposal, because I love to follow incentives, and it seems like there will be a lot of them in the Zksync ecosystem.
Yeah. So I think what they're talking about doing is 300 million Zksync. Which what's the math on that? What is Zksync trading at right now?
Great question. Is that Dex Screener be the best place for that? Probably.
Yeah,
Even trading, would probably have it.
Zksync are trading at 14 cents. Is that right? I guess that's right. Yeah. So somehow I really got the math wrong in my head. So what is that? So 14 cents, or let's say 14 cents times 300 million. And that's not math I can do in my head.
14 times 300, 123. That's 4.2 million? No. Yes. No. 42 million. There we go.
42 million. Okay. Somehow I had thought that this was like $100 million incentive program, but still seems, cool. But yeah, $45 million they're going to be distributing over, 9 months. So relatively short duration. This isn't points. So this isn't something you need to like wait to actualize. These will be like real incentives. I've heard they're going to do a big campaign to kickstart things on Aave. And I always like, as I've been saying, Aave farming. So if I can kind of get more favorable rates because they're subsidizing, borrow costs or supply costs or whatever it is, I think it could be very interesting. They do already have an instance. I'm not sure like what they have on here. I think they do have, so they've got wrap staked ETH, they've got ETH, they've got ZK. I believe they're going to be adding EtherFi ETH relatively soon. So, I'm not sure if any of this stuff is like inherently interesting today, but, if they pass this $45 million incentive program, I think this will be one of the first places I'm looking at for yield.
So emote here, not crazy emote. It's 90% max LTV, but the borrow cost is 1.28. So that's actually a pretty decent, just wrap staked ETH loop, right? So that's 10x leverage. The difference between 3 and 1.2 is roughly, let's just call it 1.5. 1.5 times 9 is 1.5 times 9 is 13.5. So 13.5. So we're going to get roughly, 19% APR just from wrap staked ETH, almost 20% APR just from the wrap staked ETH loop. And then whatever additional ZK there might be. So could be like, if you think that this might fill up, it could be like a nice thing to jump into. But is there anything else you're farming? Go ahead.
How deep is liquidity? If you click on markets over there on the top left, what is the depth of liquidity for ETH
Top
that can be borrowed and
left.
stuff?
So total borrowed 260. I mean, not a lot. Not a lot in Aave terms, right? There's $350,000 worth of ETH to borrow, which is really not a lot for Aave. And then there is only $400,000 of wrap staked ETH deposited. So this is, I would say, an well, how would you say it? Small. It's a small market.
Yeah. So my sense of what's going to happen is they're going to pass this $45 million incentive program.
It's going to blow up.
And it's going to blow up. They're going to be paying people to supply their ETH, and then it'll be very profitable to loop up wrap staked ETH and EtherFi ETH. And like that's pretty much all they need to do is like incentivize people to lend USDC and ETH, and then the rest will kind of take care of itself, right? Then the demand will be there to borrow ETH for wrap staked ETH or for EtherFi ETH. So I'm certainly looking forward to this. It's on my radar as probably one of the next interesting farm opportunities. I'm also hoping that it kind of kicks off a new round of farming. I think, I don't want to get this wrong, but my sense is that this program, this $45 million, is much more than the Optimism DeFi summer was, and is, comparable to kind of the Arbitrum one. So hopefully we start seeing more of an arms
it's
race.
A smaller addressable TVL, right?
Yeah.
Well, I don't know. I haven't checked, but I assume Zksync is smaller than Optimism. I could be wrong. Optimism shrank to like nothing before they had the incentive program.
Yeah, I don't know the direct numbers. It'd be interesting to kind of look at them, but I think it's going to be sizable, especially if you get in early and you're paying attention, and there will be opportunities popping up where you can maybe loop stuff really favorably, LP stuff really favorably. It'll then get diluted, of course, but then maybe there'll be the next kind of ecosystem that wants to play the game and compete. So hopefully it kicks off.
This is true. Zksync era, right? That's the right chain.
Yeah.
There's only $88 million of TVL on the chain. So if they're doing a $42 million incentive package, I mean, literally, if they just gave every dollar on there an equal distribution, that would be 50% APR on the chain.
Yeah. So now imagine you can leverage it up, and you can get that times X leverage. That would be exciting, right?
Yeah.
So we don't know the details. Let's
get super hyped about it. Let's just make promises to everybody.
Yeah. No, but my point is that it's worthwhile keeping track of, because
sure.
There could be some very outsized returns here.
Absolutely. Okay. Well, I think we should end it. There is like drama in the world of MakerDAO and Rune, but you know what? Let's save the drama for another day. Unless you have any like last second alpha.
No. For those scroll farmers out there, congratulations on your airdrop. And yeah, always a pleasure to chat, Stephen.
Absolutely. All right. And everyone else, have a wonderful rest of your day.